back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, as promised, let's get straight to the stock-specific action. Our entire research team is standing by to help you out with just that. Sonia, you go first. Tata Motors, numbers good?
Well, good set of numbers, largely above what the street was estimating, and strong, growth across businesses for Tata Motors. I'll come to that in a bit, but more importantly, I think what the street will focus on is how the balance sheet of Tata Motors is improving. So the net auto debt for Tata Motors has gone down by 13,800 crores compared to last quarter. And that's a big fall in their net debt. It's something that the street likes. Also, the CV business EBITDA margin has come in at a 17-quarter high of 10.2%. Overall, if you look at it, the management is now targeting more than a 6% EBIT margin in FY24, and the India business net debt is now the lowest that we've seen in the last 15 years. Quickly to run you through how the overall performance has been very strong. So revenue growth of almost 34%, EBITDA has gone up 58%. The poll was 13,900 crores EBITDA. It's come in at 13,100 crores. So in that context, you could say it's slightly lower than what the poll was indicating, but very strong numbers nevertheless. Even the net profit number at 5,400 crores is much higher than the poll of 4,680 crores. But the Jaguar Land Rover business is improving quite considerably, and that's something that the street will like. 50% revenue growth, EBITDA margin up 200 basis points year on year, volume growth of 24%, realizations are up about 20%, and it's an adjusted profit that JLR has reported this time around. Also, the street is quite confident that, the guidance that JLR has put out to deliver a $2 billion pound free cash flow in FY24 is something that they can achieve, because it's a strong free cash flow of 16,600 crores in the second half, and the full year auto free cash flow has come in positive at 7,800 crores. So that's something that the street will definitely like. But let's not forget that the stock has also rallied considerably in the last many weeks.
Okay, all right. Thanks a lot for that, Sonia. Well, let's hop across to Mangalam. He's tracking a whole host of results, namely Colgate as well as D-Mart. Morning, Mangalam. D-Mart's numbers a little bit disappointing.
That's correct. So let's start with D-Mart itself. Well, the revenues of the company are largely in line with expectations, and that's because the company had already given the revenue number in its fourth quarter update. It's the EBITDA growth that's lagged the revenue growth, and as a result of which, the gross margins as well as the EBITDA margins have been way below street expectations. The gross margins actually, despite a 20% plus jump in the company's revenue, have declined by about 100 basis points, and as a result of which, the revenues, which were close to around 10,600 crores, yielded an EBITDA of just 772 crores, much below street expectations of 1,000 crores, and the net profit coming in at 460 crores, again, way below street expectations of 650 crores itself. Among the internal details that the company reported, the same-store sales growth in the second half of FY23 have been around 11%. But, FMCG continues to do well, whereas general merchandise and apparel, which is a higher gross margin business, continues to struggle. In fact, this number as a proportion of sales pre-pandemic was around 27%. That's now settled at 23%. And sales per square feet also just below pre-pandemic levels. So as a result of which, expect further red on D-Mart. Remember, the stock has corrected a good 30-35% from the highs as well. For Colgate, the revenues have been in line with expectations, but the operational performance has been much above expectations. And that's largely because the company scaled back on ad spend. So if you just take a look at it, revenue at 1,350 crores, the street was working with a number of a similar nature. The EBITDA came in at 450 crores, whereas most of the street were working with a number of around 400 odd crores. As a result of which, the net profit has come in at 316 crores versus expectations of 276 crores itself. The gross margins have been maintained. The company says that going forward, they believe that the category growth could be a little higher. So let's see whether this stock holds in the green in today's trading session or not.
All right, Mangalam, thanks very much for that and for those names. We'll keep a track. Now, IGL reported numbers and so did HPCL, and Sonal has got both of them for us. Sonal, morning.
Good morning, Prashant. Let me start with IGL, where numbers, yes, they did improve on a quarter-on-quarter basis operationally, but they were lower than what the street was working with, especially in the light of MGL and Gujarat Gas reporting a strong beat. So revenues, they were flat on a quarter-on-quarter basis. EBITDA was up 9%. Margins came in at 12.6%, but they were lower than the poll of 13.8%. Profits were also up 19%, but they were slightly lower than CNBC-TV18 poll of 365 crore rupees. EBITDA per unit in line, volumes in line with estimates at 8.3 mm MMS CMD. But since EBITDA was a miss, Jefferies, they have gone ahead and they've lowered FY24 EBITDA by 12% on the earnings miss. They have a buy rating on the stock with 560 rupees per share as the target price. But compared to the peers, it reported a miss, so expect the stock to be in the red today. HPCL, on the other hand, reported good set of numbers. It was a sequential increase and better than what the street was working with as well. Revenues were down 1.5%. EBITDA, however, was up 241%. Margins higher by 300 basis points, and profits they were higher to the tune of 3,222 crore rupees. GRM said $14.1 versus an estimate of $10 per barrel, so it was a refining-led beat this time. They've also announced demerger of their lubricants business. They want to do some value unlocking. Motilal Oswal says, however, that Singapore GRMs now have come down substantially from the peak, and going forward, refining margins could see some pressure. So yes, these are backdated numbers. Going forward, we'll have to watch out for marketing margins and refining margins as well.
Okay, all right. Thanks a lot for that, Sonal. Well, Abhishek joins us to tell us about Manappuram Finance. Morning, Abhishek.
Morning, Nigel. So the results have beaten our poll. However, they are losing the sheen on the gold portfolio. So the gold loan share of the AUM is right now at 55.7% when compared to 66.65% in the same quarter last year, and about 58.4% on a sequential basis. Even the gold tonnage that they have is the second lowest in last 4 to 5 years or even more. So AUM growth is at 17.2% YOY and about 11.2% sequentially. Sequentially, the calculation shows that the net interest margin has declined quarter on quarter. NII is at 1,183 crore. We were working with a number of 1,075 crore, and that PAT is at 415 crore. We were working with a number of 394 crore. So it's a beat on our poll. And Asirvad, the microfinance that they have, their subsidiary, that gross NPA ratio over there has improved drastically to about 2.8% when compared to 6.7% in the previous quarter. There's also another update that has come in. The VP Nandakumar has received an interim stay order from the Honorable High Court of Kerala. This is for 2 weeks beginning 12th of May. The order directs him to take prior approval of the ED before dealing in his movable properties. So the company has also stated that Nandakumar will appeal against this High Court order for the modification of conditions that is there on the stay order. Back to you.
Okay, thanks a lot for that. One of the other stocks that could be in focus this morning is DLF after very strong operational numbers. Sonal has more on that. Sonal's also tracking Naveen Fluorine this morning. Sonal, over to you.
Good morning, Sonia. Strong set of numbers from both the companies. Let me start with DLF. Stellar set of bookings. This is because of their luxury projects in NCR. So look at this bookings trend. This time around at 8,458 crore rupees, which compares with the quarterly average of around 2,500 to 2,700 crore rupees. It is a record high number for the company, and 90% of this contribution came in from newer projects and the luxury projects, especially the Arbor for the company. Collections again at a record high at 1929 crore rupees. Net debt for the company is at a multi-year low in the residential business at 721 crore rupees versus 2100 crore rupees on a quarter-on-quarter basis. CLSA says that the company has given a pre-sale guidance of around 11,000 to 12,000 crore rupees for FY24, which is quite conservative considering that they have already done 15,000 crore rupees in FY23. They raised their pre-sale estimates by 21% and 14% for the next 2 financial years. JP Morgan has gone ahead, raised the target price to 510 rupees per share. The residential business is now almost debt-free, which is the first in 15 years according to JPM. Expecting green here, and also Naveen Fluorine, which was another strong set, a top-down beat here. Revenue growth of 70%, EBITDA growth of 114%, margins expanded by 600 basis points, leading to a profit growth of 81%. And all the 3 segments where the company has done well: specialty, HPP and CDMO, where revenues are up anywhere between 28 to 106%. Jefferies, on the back of this, has upgraded the stock to a buy. Target price has been raised to 5,610 rupees per share, and also raised their profits estimates on Naveen Fluorine on the back of a strong set of numbers. Expect that to be in the green as well.
All right, Sonal, thanks very much for that. Now, Max Financial also reported numbers, and the VNB margins, there is a bit of a dip as compared to same period last year. Surabhi's got more details. Surabhi, morning.
Thanks so much for that. So Max Financials reported a mixed set of numbers. It reported an APE growth of 38% on a year-on-year basis, but that was largely expected due to higher share of non-par savings products, and also the number was factored in because the March business data was out. The value of new business, that was up 31% on a year-on-year basis, but the VNB margins were slightly lower. It came in at 30.3% versus 31.9% same time last year. So that's a point of concern. Also, the embedded value saw a good growth. It was up 14.7% on a year-on-year basis, and the return on embedded value came in at 22% versus 20%. So a 200 basis points expansion over there. Now, what's important to watch is the outlook for FY24. So kind of APE growth guidance they give for FY24. Any clarity on the promoters' stake pledge and the growth visibility in their Axis Bank channel. So these are important factors to watch out for in Max Financials.
We'll keep an eye out on that, Surbhi. Thanks a lot for that. Well, let's wind this down with APL Apollo Tubes. Then the numbers, no worries really on that front because we already had the volume numbers. But when the volumes go up by around 18%, you'll expect some operating leverage to play out. So maybe some on the street were expecting the EBITDA per ton to be a little bit higher than what they delivered. It's good, but maybe some bit of an improvement is what the street would have been anticipating. The value-added products, well, that came down on a year-on-year basis. So that could be one of the reasons why, in fact, we did see some bit of not a great expansion on the EBITDA per ton. Net debt stays in very, very, controllable levels at around 240 crores odd. And the working capital days from double digits of the last few years, it's come down to just around 5 days. The management has said that in the coming time, the EBITDA per ton will scale at around 5,000 rupees per ton. And they're looking at volumes of around 3 million tons odd. Only problem is, maybe in fact valuations at around 50 times trailing are a little bit expensive. So going with the tinge of red on this one. No big disappointment, but maybe some bit of red.
All right, thanks a lot for that, Nigel. And to our entire team, here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow, there's Tata Motors, Colgate, HPCL, Manappuram Finance, DLF and Naveen Fluorine. While stocks with negative news flow, there's Avenue Supermarts, IGL, Max Financial and APL Apollo Tubes. But let's also find out what's happening in the world of commodities. Manisha Gupta is joining in now for a roundup of all the action that's taken place over there overnight. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, I'm looking at the US dollar index, which has seen a decline of 1.5% in the previous week. And that has been the biggest weekly, gain, since the month of Feb. So the strength in US dollar, it seems to be weighing on various other commodities. There is uncertainty on US debt ceiling, monetary policy, and then there are so many US Fed speeches in this week as well. Jerome Powell speaks on Friday. So this week is expected to be quite choppy. The crude oil prices in the meanwhile have continued to slip, and we have seen prices decline 14% in past 4 weeks. Gold prices also have extended downward trend. We did see an all-time high of 2,080, but it's not able to hold 2,020 as well at this point in time. Same is the case with metals also. They have slipped further. So nickel is at a 7-month lows, copper at around 4-week lows. Iron ore and steel prices have continued to decline as well in Asia right now.
All right, Manisha, thank you very much for that.